Regardless of what we may sometimes think or how it may sometimes feel, we do have options. Hi guys, my name is andiswa.mojapelo and welcome back to my YouTube channel. If you are an existing subscriber, thank you so much and big ups to you. And if you're joining us for the very first time, welcome. I really hope you like it here. We chat about all things related to personal finance and adulting in general. Now, before I begin, let me first remind you that none of my videos constitute financial advice. If you are looking, please consider a financial advisor that is registered with the FSCA, or in this instance, even a registered tax practitioner, depending on the specific individual need that you have. Now that that's out of the way, soon after I started working, I was always just a bit nervous around tax season. And that's because I'm generally nervous around things that I don't have enough information on or that I'm not familiar with, right? And I was always nervous because I didn't know what to expect. I didn't know how to prepare for tax season, what was considered in the calculation, and honestly, if I was receiving a refund or not was a surprise to me. And it was a hoping for the best and expecting the worst type of situation. But there always seemed to be people who were excited for tax season, and I could never understand why. What did they know that I didn't? And what did I have to find out? So if you are asking yourself these questions or you've been wondering, then this is definitely the video for you, because I want to try, emphasis on the try, and break down what all this fuss around tax season is about, and also speak to the tax submission process. What are some of the things that are considered in calculating the income, etc. And I'm not going to dive too deeply because I just want us to leave with a general understanding of what is going on, because that's what I needed in that instance. Just someone to explain to me what is being considered, what can I do, what can I not do, and how can I prepare, etc. So tax season is around the corner, and from the 1st of July to the 23rd of November, we will be able to submit our tax returns for the 2021 tax year. So a tax year is basically the calendar period that SARS uses and from which they base their calculations. So what that means is that they will be assessing the activities that happened from the 1st of March 2020 to the 28th of February 2021. And why that's important to know is because if Andiswa says she is getting a tax refund this year because of doing X, Y, and Z, you cannot rush to go and do that exact same thing and expect a tax refund in the upcoming submission, right? Because that period from which they are assessing has passed. So it's not all lost, and some tax benefits do carry over onto the next tax year, but it just means that you won't immediately receive the refund now. And that's why it's important to know that. So all eligible individuals pay PAYE, which is pay as you earn. And most of us have seen this on our payslips, or rather we should have seen this on our payslips. Now, the reason I say eligible is because not everybody pays income tax. It's determined by a number of factors, one of them being the minimum amount that an individual has to earn. But for the purpose of this video, we're going to assume that we all are salaried and that we pay as you earn, and we know this amount because it's on our monthly pay slips. Now, on your pay slip, you will find this amount, you will find your contributions, your deductions, and depending on the choices that you've made or your employer, you'll find a number of other things on your pay slip as well. Now, during tax season, one of the things that you receive is an IRP5, right? Your employer would send this to you through a link, an attachment, or in whichever way that they've sent it. I have received mine for some time now, and you might have received yours as well. If you haven't, then you can inquire. Now, the IRP5 will have your taxable income. Yes, the portion of your income that is taxable, because we don't get taxed on our entire gross income. We only get taxed on a portion. And some deductions are taken into account before we pay tax. And we're not going to go through what those deductions are or how they work because they can get quite technical. But what's important to know is that IRP5 will have your taxable income, your earnings, your contributions, like your UIF and your retirement, etc. And you can think of your IRP5, or rather, how I like to think of my IRP5 is a payslip, but instead of for a month, it is for the entire year. So why doesn't SARS use this IRP5 to determine your income tax? And why do they want you to submit your returns? So they do use the IRP5, and it's one of the things that they do consider. And one may even say one of the most important things they consider. They consider your IRP5 or IRP5s because you can have more than one. So each IRP5 is per employer. So if you had more than one employer during that tax period, you would have more than one IRP5. Now, that IRP5 takes into consideration the activity of your earnings and contributions with your employer. But you've done more than that. So there's other things that you've done, like you could have incurred medical expenses, you could have contributed towards your medical aid, you could have contributed towards an RA, earned interest on your investments, had dividends declared, and all of those things that aren't necessarily considered on your IRP5 that SARS needs to take into account when they calculate your final income tax. So we considered our IRP5 as our annual salary slip, and we can consider this portion as our personal salary slip. So this is all of the other things that happened in your finances that are not necessarily through your employer. So this could be earnings you earned through your side hustle. It could be rental income. It could be interest, dividends, medical expenses, contributions, RA contributions. All of those other things that aren't necessarily there would be on your personal payslip. Now, when you submit your income tax return or your IRT12, what you are doing is that you are compiling all of the other things plus your IRP5 or IRP5s to have a comprehensive statement of all the things that happened in your finances that affect your taxable income and subsequently the income tax that you will pay based on that taxable income. Right? So this gives SARS the full picture. You need to fill in the blanks and let SARS know that over and above what my employer has paid me, this is what I've earned. Over and above the expenses that I have incurred or the contributions made, these are the expenses that I also incurred, or these are the contributions that I've also made. And SARS then looks at that full picture to determine the fair amount that you should have been charged when it comes to income tax. So using this, SARS then determines whether the tax that you have been paying during the year is more or less. For instance, if that final calculation that includes everything comes out to be higher, right, than the tax you have already paid on a monthly basis during the year, that means that you have paid less than what you were supposed to. So you need to top up. You need to pay more in order to reach that amount that is actually fair, considering everything that took place in your finances. If the final amount that is calculated on your income tax return is less, it means that the fair amount of tax that you should have paid is actually less than the amount of tax that you have been paying. That is when SARS owes you a refund. They need to give you a portion back of the income tax that you have been paying during the year. And that's when you hear a person say that they've gotten a refund from SARS. If you take away anything from this video, take away the fact that there are a number of things that affect our taxable income. And if you have knowledge and information on what those things are and how they affect your taxable income, you can use that information to legally reduce your tax bill. And regardless of what we may sometimes think or how it may sometimes feel, we do have options. Now, the second question is, does everybody have to submit their tax returns? And the answer is no. If you earn a total of less than 500,000 Rand, meaning that all the income that you earn is less than 500,000 Rand, you have had only one employer during a tax period. So that's from the 1st of March 2020 to the 28th of February 2021. And most importantly, you do not have any tax related allowable deductions, meaning that you haven't made any contributions to an RA, you didn't incur additional medical expenses, you're not contributing to a medical aid, all of those factors that influence the amount of tax that you pay, then you would not need to submit your tax return. But very important to note about point 3 is that that is your opportunity to, if you have any tax related allowable deductions, get that refund. This is the opportunity to do so. So if you don't file for your tax returns, then obviously you lose the opportunity. So what are your options? SARS has made things a bit easier by introducing their auto assessment process, for which a number of individuals are selected. And in that process, you have one of 3 options. Option 1 is that you accept. This means that you accept the auto assessment done by SARS, and them using information from your employer and financial institutions, medical aid schemes, and all related parties that are basically involved in giving them the information that they need in order to assess you, and you accept that information and you accept the outcome. Option 2 is to edit. This means that you want to provide this information, this other information that we've been referring to in the video, and you also want to, in some cases, verify the information that's already been provided and complete your filing in that way. So you would choose option 2, which is to edit. And then option 3 is ignoring. So if you choose to ignore the SMS, like I do, or my other SMSs, which aren't as important as this one, then that means that SARS will raise an auto estimated assessment. And what that means is that if you would like to disagree with that estimated assessment, you would have to go through an appeal process. So personally, I wouldn't want to go through an appeal process. So I would rather make a choice and make sure that it's recorded. So, guys, you'll notice that I didn't dive too deeply into each of the elements, and there's a lot to consider, but it can become quite overwhelming all at once. So there are other things as well, like what are those deductions that I keep referring to that can reduce the amount of tax that you pay? How do you actually complete your e-filing online? Like I use a very user-friendly platform that I find quite efficient in completing my returns. And there's also how to prepare for tax season and what are some of the documents that you need to collect and look out for in your emails, etc. So if you want me to do videos on those topics, please let me know in the comment section along with your questions. Otherwise, please give me a thumbs up if you enjoyed this video and also consider subscribing if you haven't done so. I'll see you in the next one. Bye.